Hey students, this is Mr. Liu and I am your 7-minute sensei, where I attempt to explain everything that you need to know in 7 minutes or less. Today we're going to talk about the assignment for accounting. We're going to analyze some financial data. There are three financial ratios that I want you to calculate, and it's just a 100-word essay about your view on the company I've selected, which is Amazon. So I'm taking a look right now at the Amazon balance sheet found on the NASDAQ website. And so the first ratio I want to talk to you about is what's called the quick ratio or the acid test ratio. Now with that, we're looking for our most liquid or most current assets. And so it's not the total current assets, but it is things such as your cash equivalents. It would be your short-term investments. It could be your net receivables. This concept here of net receivables, that is what the company is expecting to receive from people that owe them money, less whatever amount they determine as uncollectible. So typically they'll say 2% of this is uncollectible, so they subtract that out. Inventory is not liquid, so that would not be part of our quick ratio or acid test ratio. So we take all of that, we add that up, and we divide that by our current liabilities. And that's how we get our quick ratio. Next, I'd like to talk to you about the current ratio, which is, as it suggests, it's your current assets divided by your current liabilities. And that's all you need to do to calculate that. Okay, so let's talk for a moment here about the profit margin ratio. So for that, we need to take a look at the Amazon income statement. So switching from the balance sheet to the income statement, this is what we'll find. We'll find that they do have a total revenue, and that's this figure right here, the $280 billion. All these numbers, by the way, are in thousands. And we actually have to take the net income first, $11,588 million. Divide that by the total revenue or total sales, and that is 280,522, and that's how we get our profit margin. Finally, let's just talk about Amazon's PE ratio or price earnings ratio. Once again, this is an extra credit assignment. What we do is we take the current price for the day. So in this example would be 1918, that's the price, and then the earnings, earnings per share. So I believe there are about 498 million shares of Amazon common stock outstanding today. So we take the price and we determine earnings per share, and we get a PE ratio. So the PE ratio right now for Amazon is fairly high. I want to say about 79 or so. Well, actually it looks like, well, today it's about 79. The other thing that you probably want to look at is what's called the PEG ratio. That's the price earnings divided by the anticipated growth. The PEG or PEG ratio for Amazon is relatively high today. It's about 3. So that's compared to a Microsoft, which is about 2, and an Amazon, which is about 1. And what that suggests is that the Facebook stock today, again today, is a relatively good value. When we talk about PE ratios as high as we've seen now for Amazon, that is suggesting that the investor who's interested in buying one share of Amazon is paying about $82 per share, $82 for every $1 that was made by the company last year. So it's pretty high. If the company is growing, that's great, but the anticipated growth for Amazon is not that high. So that's why you have this PEG ratio of about 3. I hope this has been helpful and informative for you. This is Mr. Liu. I am your 7-Minute Sensei, saying so long. Stay healthy, stay safe, stay home. Peace out.